Let's get started. How was last week? How's the setup for next week? That's what we're gonna talk about as usual, as we've been doing the last few weeks. But today I want to start with Tesla. I think this is one trade we talked about last week where I said you don't want to get burned. I think that's always a risk. And your trade was here. So that was your trade that we discussed last week, the Monday before. Your exit is here. You said you had a tight stop. So if you have a tight stop, your 2-to-1 ratio will come before it hit the high, right? So remember, always set your entry and your exits, both the top and bottom exit, always. It is a must, this without fail. And if you recall last week, I said, what if it gaps down on Wednesday? Right? And it's exactly what happened, right? It gapped down on Wednesday, it gapped down on Thursday, it gapped down yesterday. Your pain just kept increasing day after day, and it gave you some relief today. So for me, these are very good teaching moments, right? That's why I want to talk about them. It's not to say you did anything good or bad, right? It's really to focus on those teaching moments to where we can have the market reverse and give us what we want in a couple of days. But right now, that's really a very risky thing, right? So let me start by asking you the question. What action did you take on Wednesday?
Yeah, I just sold
Okay.
my entire position.
So as soon as the market opened on Wednesday, you sold, right?
Yeah, it was a little later than that. It wasn't
Okay.
like on the dot, but yeah, within the first hour.
Okay. So let's just put it this way. So
Yeah.
basically, what that means is your stop was here. You see now, by waiting, how your ratio has now dropped below 1.
Mm-hmm. Yeah.
So very good. I'm glad this is on paper trading. You make this mistake, right? So that you don't make it again. This is really a beautiful trade. I'm glad it went against you, because if it doesn't go against you, you'll be too overconfident and not do the stops properly, right? So I'm glad you did that. And price is back where you exited. Even if price shoots up from here, don't feel bad for the exit that you took,
Mm.
because it's the right exit. You have to have stops. If you don't have stops, then you're investing. I'm okay if you're investing, right? All my investments, I don't have stops. I don't trade with stops on investments because I don't trade them. I'm in it for 10 plus years.
Mm-hmm.
But in trading, you have to have a stop, because you want to be able to be profitable over time. So this is really a beautiful setup, beautiful trade. And then we have multiple gaps that kept closing. Like even this gap is closed. Multiple gaps are closed, with the exception of this gap up here. So this gap is still there, is still intact. So with this gap still intact, we could come back up here before it goes back down. I'm not looking at Tesla right now, so I don't want to spend too much time on it. But for me, the big lesson was, I'm glad you took that exit, because exactly as I feared, it gapped down 3 days in a row. Okay.
Mm-hmm. Yeah.
All right. So now, between last Tuesday, or I should say Wednesday, when you exit this trade, did you take any other position?
Yeah, I only took one other trade, and
Okay.
I ended up actually getting stopped out because I did set my exit and then it reversed to the upside, unfortunately. So my stop was too tight, but it was on Meta.
Okay. So let's look at that. Let's look at that. So what day did you enter?
I entered on Wednesday at 10:30.
So you enter on this bar to the upside.
Yeah, and it was that hammer.
This hammer here that gave you the indication to go to the upside.
Yeah, and it was nice little shallow pullback. It wasn't the biggest pullback, but it was a pullback there that I wanted to take advantage of.
So I'm drawing the fib, and I'm intentionally starting from the bottom and going up. Like we don't capture the 38.2, so we keep pushing it up. But so when you took the trade on Wednesday, this was your fib.
Yeah.
This was your fib when you took the trade on Wednesday.
Mm-hmm.
So our area of value is somewhere down here. But at the same time, somewhere here, you have a demand zone.
Yeah.
Okay, you have a demand zone. So in theory, did you have this demand zone? First, let me ask that question.
I did. Yeah, I
Okay,
did.
very good. Okay, so in theory, when you don't touch the 23.6 and you don't touch the demand zone, I would wait. Yes, you got a hammer, and I'm noticing a few of your trades. You see a hammer, you take the trade, irrespective of where you are, right? So that area of value is going to become valuable to you over time. Because here's why. This trade that you took, not a bad trade. Again, all the time when I give you this suggestions, I'm not saying your trades are bad. I'm just trying to give you opportunities where your trades could be better. So if you
Yeah.
take this trade, and if let's set the proper stop, which is the next logical area to the left, is this swing. This is the proper stop. If you set this, your 2-to-1 ratio is somewhere up here. Somewhere up here. Okay? This is your 2-to-1 ratio. So if you had set your proper entry and exits with stops not being too tight, you still be in the trade. Okay?
Mm.
Now, if we improve the entry, instead of this hammer, we get this bar here that touches the demand zone, but this bar sticks out by itself. Even though it's not a hammer, I personally I feel like I can take it because the bulls said we're not gonna allow you to go any lower than this, right? We're gonna be in charge. So at the top of this bar, you can do your entry. And when you do this, now you can say, because this has given me a proper swing low at this demand zone, I can make it tighter, or you can say I'm gonna keep it right outside the demand zone, irrespective, right? You can say that. And now your 2-to-1 ratio, where does it fall? Boom, you have an exit. By making a slight adjustment, right? A slight adjustment, and you haven't touched the stop. You kept the stop about the same. That one slight adjustment, then you'd be in a profitable trade. So let's focus on putting everything we've learned together. Because I said that because I see you. Oh, I saw a hammer. I took the trade, right? I saw a hammer. I took the trade. Now, if you had said this here, I saw hammer. I took the trade. We've actually come down to a good area of value, right? We've come down here, and we have this demand zone here, and we're inside that demand zone. I prefer you take trades like this. I prefer you skip instead of taking a trade for the sake of taking a trade. I prefer you say I looked at all of my charts and I didn't see a setup, I didn't trade. Right? Not that I missed the setup, I was sleeping. Right? When you say I didn't look at the chart at 10:30, that means you were sleeping on the job. You know what I'm saying, right? So
Yeah.
your job is every 2 minutes you're supposed to look at the chart. Every hour you're supposed to look at the chart for 2 minutes. And when you skip a trade, is saying today I don't have 12 minutes. I'm skipping. So you can put that in your journal. On April 5th, I did not take a trade because I did not have 12 minutes. Or if you say on April 7th, I did not take a trade because I did not have an area of value to take a trade, right? So that's part of your journal, because then your mind will be always alert to why you take a trade, why you don't take a trade. So technically, this was an okay trade, right? It was an okay trade. It would have worked out, except your tight was not your stop was not a logical place. You just wanted a tight stop, right? And so when it's not logical, you get stopped out more times than not. When you put it at a logical place, it's wider, but you don't get stopped out that quick, right? You don't get stopped out that frequently. Plus, your risk is the same. Think of it this way. If you're willing to risk $100, right? If you say, if I lose $100, I'm out. And if your stop is $1, that means you can take 100 shares. If your stop is $2, it means you can only take 50 shares. So I would not focus on making a stop too tight. It serves you no purpose. The goal is I'm only risking $100, then you adjust the number of shares. The stop should not change because of that, right? So maybe that's one lesson that I have not made clear, which now you have it. Just focus on what does full position mean to me. Full position means a maximum loss of 500. So half position 250, quarter position 125, right? So first you make that determination what full position means. And then when you take a trade, you decide, do I want to take a full position? For example, this trade that you took, you could say, I don't want to take a full position on this one. It's not truly an area of value, but it might reverse from here. I'm going to take a small position, not a true full position. So you take a quarter position here. When it gives you this, now you can say, I'll add the rest, 3/4 of position. Now I'm in a full position. And your cost average is a little lower. And because of that, your exit, your 241 exit is not it's not this high, it's not this low, it's a little bit higher. So maybe it's something like this, and I don't know if we exited, right?
Yeah.
Yes, so it's closed. This position is closed because we hit that.
Yeah.
This is a bit tricky the way I'm showing you, because where you put your stop really matters on how you multiply. Right now we have hindsight, in our favor. That's why. But logically, it's a little bit below this area is where you put your stop. So somewhere here, I don't know how wide you want to make it, because you have to know that chart. Like I know my average daily range is about $1 something. So from this low, I want to go lower by another $1.50. You can play with that once you learn that chart. Or you can say, look, if it's a penny below this swing low, I want to be out. That's okay. Especially if you take your trade here, you can make it tighter because you came to an area of value.
Yeah.
If you take it here, quarter position, you don't want to make it too tight, right? You want to give it some room. And then you get your 241 trade, boom, you're out. So, good trade. Good trade because it's teaching you a lesson. So right now, if I think of your trade, you're still in it, right?
Mm-hmm. No,
Or
I got
or or
stopped
you
out.
got stopped out. You got stopped
I
out.
got
Okay.
stopped out. Yeah.
So here's one thing also I want you to consider. When you get stopped out, you took a trade here, you got stopped out. When you get stopped out, do you walk away or do you say, why did I get stopped out? Oh, yeah, here is my true area of value. And did you re enter? I know you didn't, but I want you to think that way. Oh,
Okay.
my stop was too tight. And, you know, don't say my stop was too tight at every loss. I'm just
Mm-hmm.
saying, like, if your stop was at a logical place, it should not be too tight. If you're making it too tight, that means you want to take too much risk, right? That like at a wider, if you can only take 50 shares, you're still taking your 100 shares up here. That's why you're making your stop tight.
Mm-hmm.
So play with the stops. Consider re-entering that same position, same direction, if you had taken a position a little bit sooner, right?
Mm-hmm.
And then your second trade would have been profitable. You would wipe out this loss.
Yeah.
Okay, is making
No, that's
sense?
definitely. Yeah, totally. Especially
Okay.
considering like you had time too to re-enter, because it
Yeah.
wasn't like boom boom within a short minute, like a 1 hour interval. It took its time to kind of get back to it, right? Because I got stepped out, took a couple more hours. The next day it opened red, and then the second hour I see it almost getting back to that hammer reversing. So definitely I see that now how you can kind of get back in there.
Yeah,
Um,
but you probably got stopped out on Thursday,
the
right? You
same
didn't
day.
get
Yeah,
you got stopped out
same
the
day.
same
Oh, no,
day.
no, you're right. You're right. Actually, it was the next day.
Yeah,
The
you got
next day
stopped out the next day,
morning.
right? So because your stop is somewhere down here,
Yeah.
and the next morning when it opens down here, it
Mhm.
stops you out past your stop,
Yeah.
and then when you reassess, it's, oh, I can re-enter. It's just here's the bar that's standing out by itself at a demand zone. I can take this
Mm.
trade,
Yeah.
but it's okay. It's okay. Fantastic.
Yeah.
So
I didn't
let's
take any.
yeah
I didn't take any other trades. Being, I did see
okay
like the cues. There was a tempting play right there with that hammer with the cues, but I chose to sit that one out. I didn't feel too confident in that one.
okay
So I left that one.
okay. So this week let's talk about our setup, right? So one setup was we're in this supply zone. Price goes outside the supply zone, comes down. It makes a lower high. We target this uh, gap, right? So that this was actually the trade, not
Mm.
this hammer. You love hammers, but it's
Um,
it's
is that the hammer? Oh yeah, it is. But
yeah
yes, I just noticed it, which is also why I let it go.
yeah
It didn't I didn't feel confident about it, and I didn't see it. Potentially it was a continuation, but I just didn't feel too confident about it, so I just let it go.
yeah. You have to look at the big picture, right? You have to look at the big
Mm-hmm.
picture, and looking at the big picture, we're in a supply zone.
Mm-hmm.
Nothing has told us we are done with this supply zone. Right? There's no clear indication. That's
Yeah.
why I don't feel comfortable with this trade. Now, you can, if you have a lot of time, right, and you can say, I see this hammer at the 23.6, right? I see it there. I want to take this
Mm-hmm.
trade. So you place this trade and you put your stop right below the 23.6, right below that hammer. I say tight stop because now in this instance, you really want a tight stop.
Mm-hmm.
Even when you take full position, you still take it. Like, let's say your uh, maximum loss is $100 as earlier example, and at a dollar you can take 100 shares. Even if you make this 50 cents, I would still take 100 shares. I would not take 200 shares.
Mm-hmm.
I would treat it
Yeah.
like my stop is my regular whether it's $1 or $2, and take that position size, because it's
Mm.
a, to me, this is a riskier trade. I'm right at the supply zone. Few days, right? 2 days in a row, like 3 days it's been inside that supply zone, but 2 days in a row it tried to push higher and it can't. So if I take this hammer and I put a tight stop, and then I want to target my, 2 to 1 ratio. Look where that 2 to 1 ratio is,
Yeah.
right? I mean, I have to push a lot to get that.
Mm.
I don't know why I have to push that much, because this. Oh, I know why. Because uh oh, no wonder.
Is it on the short side?
Yes, like it's a reverse. That's why it's not
Yeah.
working out. So very tight stop. Now I don't go for the full two, right? That's why I said you don't take that full position. Because you're tighter, it doesn't mean you double your position.
Mm.
Here, any reason that tells me I'm stalling, I want to get out. Right? Any reason, no matter what,
Mm.
I want to get out. So the two
Yeah.
is way up here. So I'm going to remove this so we can see what I'm talking about clearly. If you enter at this bar, 1 penny above this bar, that's your entry. And when price comes up here and then 2 bars consecutive go sideways, consolidation, I'm moving my stop from here. I'm moving my stop at the very minimum to the low of this bar, if not to the low of these 2 bars.
Mm.
Right? But again, that's dangerous because the next day it got down.
Yeah.
And usually when I'm playing something like this, I'm deliberately entering a riskier trade. At the end of the day, I exit. Like I don't
Yeah.
take a chance and say, hey, maybe it will push up. No, I'm exiting at the end of the day because
Mm.
I'm taking a risk. Right? It was a deliberate position, and the day before when we did our analysis, we said we're looking for this lower high to enter to the
Yeah.
downside. We didn't get a good inverted hammer, so we didn't take this trade. Like before we got the inverted hammer, the next day got way down here. I can't take that trade because this trade, somewhere here would have been a nice entry. Somewhere up here, logical area for exit. Somewhere up here, and I want to target in this zone, right? This is our zone, this gap, and you have to almost close the full gap to get your two. But
Mm.
this was a trade I would have liked to take, but I didn't get an inverted hammer up here to take an entry. I got a gap down, which is already going into the direction I want to go, so I don't want to chase, right? So another possibility would have been because I skipped this trade. Do I get another inverted hammer at a lower high here? Kind of, this guy here, kind of, but very, very small bar in comparison to the previous few bars, especially when it pushes up, right? So you
Yeah.
could have attempted this bar here, but yeah, I personally, this is one where I said I'm skipping this trade because I don't see it.
Mm.
Even though we were gapping down nicely, I mean, we push down, push down, push up, push down, push up. So it's been doing this continuously. So I decided to skip
Yeah.
this trade. On the upside, if it had, instead of going down, if it had gone up and used this as support, the supply zone, I would have entered to the upside. Spy, it's the same scenario, right? Same setup, same setup,
Mm.
same setup.
Yeah.
So if you said I want to take a trade here, very tight stop and lower high, very tight stop and exit at the end of the day.
Mm-hmm.
If you don't exit, you're still in the trade because your stop is not hit. You're still in the trade, but this is I don't like these because they don't teach you,
Mm-hmm.
right? They make you cocky. They say, "Oh yeah, I can always wait, always wait." When you play with options, the always doesn't exist. Even with stocks in a bad market, it only takes one bad trade to wipe out your account. So I really like you to focus on all your entries and exits. Any questions about last week before we look at what's next for us?
No, no questions.
Okay. Okay. So I'm removing these entries. So a lot of the conditions haven't really changed. Here's an area of value. Here's another area of value. This gap. I want to target this gap. I don't want to chase the nice entry that we have missed was somewhere up here, and I don't want to really chase, and especially if the futures open down tomorrow, that's like, okay, I missed this boat, I don't want to go. But however, if we get a small pop and we go down, uh, I will consider taking a trade up here. I will consider taking a trade to the downside, right? The short side.
Yeah.
If not, if we get some good news, this remains valid. Using the supply zone as support remains valid for us to take an entry. But I'm still biased to the downside. With a little cautious, historically, April is an up month. So keep that in mind. That's also another important thing to remember. April is historically an up month. So up could be up by a penny, it's still an up month.
Mm-hmm.
So if some folks like institutions want to make it an up month before they take it down, so let's just be cognizant of that. Right? So these are the two good trades that we have. The other actually nice trade would be we come down to I'll just put it halfway, my halfway green to green, right? So here's a green to green trade. This I would like. If this happens, somewhere between the 38.2 and 61.8 with a nice hammer down here, boom,
Mm-hmm.
we take it, right? Now this is a good trade to get in. Area of value. Demand zone, 50% retracement. This right here is beautiful trade. You come down, you get a hammer. That's one I want to take. Now, if I get a hammer at the end of the gap, right at the bottom of that gap, will I take it? Absolutely, because it's still that green area, 38.2. I will still take that. So that's my green to green. Anywhere green to green, hammer, railroad tracks, I take that trade.
That'd be a pretty big drop, though, right? I mean, to go from where we're at like 315 all the way to 305 is kind of
Yeah,
where that
yeah,
fourth
but
or
it's possible, right? Look at
mm,
how fast when it wants to rise, how fast it rises in one day, how
yeah.
fast it drops in one day. When it wants to do it, it will do it, right? And
Mm-hmm.
then now, it's a good question, right? You asked a very valid question. Let's measure it. Where is this drop from this high? It's right here,
Mm-hmm.
306. We're in our green to green zone. So it's
Mm-hmm.
possible. It has shown us in the past that it can do it. Right? Does it do it all the time? No. But if it does, we take advantage of it, right? We take the trade if it gives us that opportunity.
Yeah.
Yeah.
Okay.
Do you have any other question on cues before we move to the spies?
Uh, no, I think that's pretty clear. I guess
Okay.
on the continuation, would you have um would you take a little bit more pause if it's a continuation, considering how long this move has been kind of progressing, going all the way back to the 13th?
Would I take more position?
More caution, I guess, on the continuation play. If it's
Like
just like,
continuation to the upside, you mean?
yeah.
So this first, I want to see this condition. We're out of the
Mm,
supply zone, and it uses the supply zone as support. If I see this, I'm not cautious. I'm gonna take full position, but my stop is my stop, right? My stop doesn't change. Like the
yeah.
percentage of my account size I want to risk, that doesn't change.
Hmm.
Uh, so I will use the stop, like maybe the bottom of the supply zone. I'll use that
Mm,
and have full position, target 241, and be comfortable with it.
okay.
Yeah.
Sounds good.
Especially that I now that I've told you that April is an up month,
Hmm.
and if they give you this before end of the month, take it and then let it play out.
Hmm. Okay.
But it's the same. It's the same story for spies actually, right? It's the same story that we are looking for, and so the big trade that we want is this green to green trade. Is this green to green trade because as a risk, right? Green to green, and we get to that 50%. And if we put our stop at the other side of the 61.8 and we go for our 241 ratio, look, you get your 2 before you come to the supply zone again. If you come down to the
Mm,
50%, right? This is fantastic because even if you want to make a lower high, we're going to be profitable in this trade. Like even if it doesn't reach the full 2, if we get an inverted hammer before it reaches the railroad tracks or we see it stalling and it's the end of the day, hey, we get $1.72 for a dollar risk, for example, and get out early. That's fine. That's perfectly
mm,
fine because we're being cautious because the market conditions are a little bipolar right now. Right? They can't decide which way they want to go.
yeah.
Yeah. So you can take those trades, but the setup is there. So we have it's the same setup for the spies. You have one trade in the green to green. Uh, you have where this uh, rise, pause, rise. This is a good place for a demand zone. Right? This is a good place for a demand zone. So we get this demand zone, nice hammer, railroad tracks, engulfing, boom, we take this trade. To the upside, same story. I want to see us get out of supply zone and reverse it there. That's what I want to see. Same setup. We take the trade. Uh, and on the downside, I really don't want to chase. Uh, yeah, I don't
Hmm.
want to chase. But
Yeah.
so here's one thing: when we say I don't want to chase, if you're biased to the downside, right? And I think this
Hmm.
is beautiful. This is a beautiful setup. Here's where we wanted to enter. Here's where we wanted to enter. Right outside the supply zone would be our stop, and for our exit, somewhere down here is our exit. So here's where we wanted to enter. And then the next day, because we got down, we didn't get that entry opportunity. Here we get a lower high. We get a lower high. So we can say, I'm going to move this. But I'm going to move it somewhere here. Now again, we didn't get an inverted hammer, so I'm not taking this trade, and I'm not suggesting we take this trade. But if we had an inverted hammer, we actually get a better entry, right?
Hmm.
Instead
Yeah.
of down here, maybe our entry is somewhere here. We get a better entry, and we can exit quicker. I always like ideas where my exit is better,
Mm.
right? If I can get out earlier and make my profit, I like that trade. So right now we have that opportunity if it wants to give it to us. If we get a
Mm.
slight pop up, looking at the futures, they're pretty much flat. So I don't know what's going to happen in the morning. But
Yeah.
if we get a nice small pop and an inverted hammer, you take that trade. You take the trade at a better entry, and you can get out earlier.
Mm.
Yeah.
Yeah. Makes sense.
Yeah. Okay. This is cool.
Okay.
I like this setup. So I
Yeah.
want you to look at a few trades for this coming week and see what you can come up with.
Sounds good. Yeah, I'm excited. Hopefully the market opens up some opportunities.
It does. There's always an opportunity, right? We don't spend a lot of time looking at various tickers. Once you start being comfortable, we're gonna dive into how to scan the market for your market condition. We'll
Mm.
look at those scans, and then once the scan gives you something, then you can take a trade based on that scanner, right? So you have a scanner, I don't know, some scanner, and it gives you a ticker. You load up that ticker, and if you see, oh yeah, I can take this to the upside, then you take this trade. If it meets your uh, scan criteria, it will pop up in here, and then you do your other due diligence, you do your assessment, and say, hey, it's time to go long, go short
Hmm.
on a particular stock, right?
Yeah,
Yeah,
that's very useful. So that
yeah,
kind of watches the area of value for you. Is that kind of the intent of the scanner? And then it notifies you if it meets kind of your criteria.
yeah. You set up some criteria, which we'll go into when we go into scan. You'll set up a criteria what is good for your trading style, and it will
Hmm.
give you those uh, symbols, right? And if a scanner gives me more than 50, my scanner is too broad. Like for me
Yeah.
personally, I want it to
Mm.
be something that will take me less than 30 minutes to go through all of the results, analyze, and decide if I want to take action.
Mm.
Right. So that's how I look at the scanner. So then, you know, I check 14, 30 minutes. I don't like the trade. I move on.
Yeah.
So when we get there, that's uh, that's an opportunity for you to be able to easily find stocks to trade.
Hmm. That's great. Yeah, yeah, I'm excited
Yeah,
for that.
I don't know why it's doing this.
Oh yeah, sometimes you can do the reset button. That kind of fixes it. There we go.
Yeah, no, I still
Hmm. Yeah, I
something.
usually go in a little. There's like a little gear if you look at it next to June, and then you can say reset, um, and then it fixes all the views. Yeah, right there.
So there was a like here adjust or auto. So that's how
There we
you
go.
adjust it. But this
Hmm.
button, I think they changed it today. They did some updates today, I don't know, maybe I just noticed it today, but usually, like if I mess with this,
Mm-hmm.
that's why
Yeah.
it got wacky, right? So I messed with this,
Yeah.
and then I just click down here, you know, but this is a just for dividend,
Mm.
so I just needed to do this. Yeah.
Yeah, it's good to know. Yeah, that must have been a new change because I use that all the time as well.
Yeah, it was done here. Maybe I just need to spend a little bit time and see if I can change this button down here because that's what I prefer. I don't need adjust data for dividend for me.
Yeah.
I mean, it's good. I use it sometimes, but I don't need it to be the primary.
Yeah. Totally.
Yeah. So that's what we will work on. So look at various charts,
Mm-hmm.
things that are on your radar as well.
Sounds good.
Okay, that's a wrap for today.